Welcome to the deep dive. Today, we're tackling something pretty fundamental, almost behind the scenes, in how we build trust in financial statements.
Uh-huh.
It's all about written representations from a company's management during an audit.
Right.
Think of it as the auditor getting key promises, in writing. We've got the professional standards here, specifically ISA 580, and our mission is to unpack what these letters actually are, why they're so crucial, and, well, what happens if auditors don't get them.
Exactly. It's about accountability, really.
So if you picture an audit as, like, piecing together the story of a company's finances.
Yeah, these written representations are like signed statements from the main storyteller's management. They're putting critical confirmations down on paper for the auditor.
Okay, so why a whole standard just for this? What's so important about these written statements?
Well, ISA 580, which is our main focus, it really spells out the auditor's job in getting these confirmations from company leadership, and sometimes also from those overseeing them, like the board or audit committee. It's a direct line on key responsibilities. And it's worth mentioning, we're focusing on ISA 580, but it's not alone. Appendix 1 in the standard lists other ISAs that need their own specific written reps, too.
So it's a theme that runs through the whole audit process, not just one checklist item.
Oh.
Okay, this is what I'm curious about. Auditors see tons of documents, right? Bank statements, invoices.
Yeah.
Why isn't all that hard evidence enough? Why the need for these statements from management?
That's a really good question. The standard is clear. These written reps provide necessary audit evidence. Think of it as management formally owning up to their role.
Right.
But, and this is really crucial, they aren't sufficient evidence on their own. Not for the things they cover anyway. The auditor absolutely still needs to find other proof to back up what management is saying in writing.
Okay. So it's like getting a verbal agreement and then you put it in writing for clarity, but you'd still want to see the actual contract and, the delivery to be sure.
Precisely. And it's interesting to note the timing. This standard, ISA 580, it kicked in for audits of financial periods starting on or after December 15, 2009. So it's a well-established part of modern auditing.
Okay, established practice. So what are the auditors actually trying to get by obtaining these? What are their main goals?
There are basically three main objectives laid out in ISA 580. First, the auditor wants that formal confirmation from management and maybe the board that they truly believe they've done their job.
Their job being?
Preparing the financial statements fairly according to the accounting rules, and also giving the auditor all the necessary information and access. It's like getting management to formally say, yes, we own these numbers. That sets the stage.
Makes sense, if they won't put that in writing.
Exactly. Big red flag right away about their commitment to accuracy.
Okay, pins down their fundamental responsibility. What's the second objective?
Second is using these written reps to support other audit evidence. Evidence that relates to the financials themselves or to specific claims assertions within them.
Assertions.
Right. This happens when the auditor thinks they need that extra backup, or maybe another ISA specifically requires it for a certain area.
So if there's a tricky area or a really key number, the written rep adds another layer of comfort alongside the other evidence. And the third objective.
The third is about the auditor's response, how they react to the reps they get, and crucially, what they do if management doesn't provide the requested representations.
Right. That sounds like it could get complicated.
It can have pretty significant consequences, yeah. We definitely need to get into that.
Okay, so let's nail down the definition first. What exactly counts as a written representation here? Seems simple, but are there subtleties?
Yes, good point. There are important distinctions. The standard defines it as a written statement from management to the auditor. It confirms certain things or supports other evidence.
Okay.
But key point, these written reps are not the financial statements themselves. They don't include the assertions in the financials or the underlying books and records. It's separate.
Got it. A distinct communication channel. And who exactly is management when we talk about providing these?
For ISA 580, management can include those charged with governance, the board, the audit committee, if they also have responsibility for preparing the financial statements.
So it depends on the company structure.
Exactly. It could be the exec team, the board, maybe both. The key is who's ultimately accountable for the financials.
Right. And the auditor doesn't just hope to get these. They must ask for them, correct?
Yeah.
It's required.
Absolutely correct. The standard uses the word shall. The auditor shall request written representations from management who have the right responsibilities and, importantly, knowledge of the matters being confirmed.
Okay, mandatory. And what are the absolute non-negotiables? The core things management has to confirm in writing.
Two fundamental ones the auditor must request. First, management has to confirm in writing that they fulfilled their responsibility for preparing and fairly presenting the financials according to the rule.
The applicable framework.
Right, the applicable financial reporting framework. And that includes, if relevant, confirming fair presentation as set out in the audit engagement terms.
So basically, yes, we followed the rules, and we think these financials are fair. What's the other must-have?
The second one is about the information flow. Management has to state in writing that they've given the auditor all relevant information and access, just like they agreed when the audit started.
Completeness.
Yes, and also that all transactions have been recorded and are actually reflected in the financial statements. This really gets to whether the auditor had the full picture to work with.
Makes perfect sense. If stuff was hidden or missing, the audit opinion could be flawed. And the standard specifies how this should be worded.
Well, paragraph 12 says, the description of management's responsibilities in the written reps should follow how it's laid out in paragraphs 10 and 11, those two core confirmations we just discussed. It promotes consistency.
Okay. Now, beyond those two core ones, what else might auditors ask management to confirm in writing?
Oh, absolutely. While those two are mandated by ISA 580, other ISAs, like we mentioned, might require specifics. Plus, the auditor themselves might decide they need other written confirmations.
Based on risks.
Exactly. If they think it's necessary to support other evidence they've gathered about the financials or specific assertions, Appendix A in the standard actually gives some examples. It's quite a list, actually.
Really? Like what?
Oh, things like whether their chosen accounting policies are appropriate, or confirmations about estimates or potential liabilities, maybe events after the reporting date. It covers a lot of ground. It shows how this practice underpins confidence across many areas.
So it's flexible. If an area feels riskier or more complex, the auditor might seek that extra written confirmation. Makes sense. What about timing? When should these letters be dated?
Good question. Timing's important. The date needs to be as close as practical to the date of the auditor's report, but definitely not after it.
Okay.
And critically, the reps need to cover all the financial statements and periods mentioned in the auditor's report.
Right. You want it current up to the point the opinion is issued.
Yeah.
And the format, is it always a formal letter?
Usually, yes. The standard suggests a representation letter addressed to the auditor is the way to go. But there's a caveat. If laws or regulations make management issue public statements about their responsibilities, and if the auditor thinks those public statements adequately cover what's required in paragraphs 10 and 11,
The two core ones we discussed.
exactly, then those specific points don't necessarily need to be repeated in the rep letter.
Okay, so public filings might sometimes cover part of it. Now let's get to the trickier stuff. What if the auditor starts doubting management? Doubting their competence or integrity? Maybe the reliability of what they're saying?
Yeah, this is critical. If the auditor has concerns about management's competence, integrity, ethical values, or just their general diligence, or if big issues pop up that cast doubt on these, then the reliability of all representations, written or spoken, and maybe all audit evidence comes into question.
So it's a domino effect.
It could be. The auditor has to figure out the impact on the whole audit.
And if they conclude the written reps themselves just aren't reliable, what then?
Then they have to take appropriate action. That includes thinking about the effect on their audit opinion following ISA 705 revised.
Which deals with modified opinions.
Right. It could lead to a qualified opinion, meaning mostly okay but with this issue, or even an adverse opinion saying the financials are materially misstated. Pretty serious.
Very serious. And what if management just refuses to provide one or more of the requested written reps?
It's also very serious. If management digs their heels in, the auditor has to do a few things. First, talk to management, understand why they're refusing.
Okay.
Second, reevaluate management's integrity. Think about how this refusal impacts the trustworthiness of everything else they've provided.
Right, the overall picture.
Exactly. And finally, take appropriate action. Again, considering the impact on the audit opinion under ISA 705, a refusal is a massive red flag.
Okay, a huge red flag. What's the ultimate consequence if management simply doesn't provide those crucial representations?
Well, ISA 580 says the auditor shall disclaim an opinion in two specific scenarios.
Disclaim, meaning they can't give an opinion at all.
Correct. Scenario 1. Management doesn't provide those core reps from paragraphs 10 and 11, responsibility for financials, completeness of information, just flat out doesn't provide them.
Okay.
Scenario 2. Management doesn't provide those same core reps, And the auditor concludes there's so much doubt about management's integrity that even if they did provide other reps, those couldn't be trusted either.
Wow.
Yeah. In either case, the auditor basically says, we cannot form an opinion. That's a powerful statement. It really shows how vital these written reps are.
No kidding. That fundamentally undermines the whole point of the audit. Now, the standard also has application material, extra guidance. Any key takeaways from there?
Oh, definitely. The guidance points out that written reps are especially useful when you're dealing with subjective things, like management's future plans or intentions, or just situations where spoken words could be misunderstood.
So writing it down as clarity.
Exactly, clarity and formality. It also really hammers home that management's responsibilities aren't just some abstract concept, they have to formally acknowledge them.
Right. If you're talking future strategy, getting that intent in writing is valuable, though you'd still need other evidence, I assume.
Absolutely. The guidance also clarifies that asking management to confirm they've provided all info directly addresses the completeness of audit evidence.
Okay.
And it notes that sometimes the company's own internal lawyer might be someone with the right knowledge to provide some of these reps.
Interesting.
Plus, it stresses that management needs to make informed representations. It's not just signing a paper. They need to understand and stand behind what they're confirming. Quality matters.
So it's about informed consent almost. And what if the auditor finds evidence that contradicts what management wrote?
Yeah, the guidance covers that. If audit evidence pops up that clashes with management's reps, written or oral, it can make the auditor doubt other representations too. It shows how interconnected all the evidence is.
Right. One inconsistency can raise broader doubts.
And there's a note for public sector entities too, acknowledging that the governance structure and responsibilities might be broader there.
Good point. Different contexts. Did the application material give more examples of things auditors might ask for beyond the core reps?
Yes, quite a few. Like confirming the appropriateness of accounting policies used.
Okay.
Whether things like potential lawsuits or subsequent events need disclosure,
Contingent liabilities, yeah.
management's plans or intentions that could affect how assets are valued or classified, confirming title to assets, any lines on them, compliance with specific laws, regulations, contracts. It can get quite specific.
Seems like it could cover a lot of the detailed assertions in the financials. What about internal controls?
Yes, that's mentioned too. Auditors might ask for written confirmation that management has told them about all the internal control weaknesses they're aware of, especially those already communicated to management.
Closing the loop on controls.
Exactly. And if the auditor identifies accounts or disclosures with a high risk of significant error, they might specifically request written confirmation about the assertions related just to those high-risk areas. They could even ask for a formal statement on compliance with a specific law if it's really crucial for the audit.
So lots of tailoring based on the audit specifics.
Yeah.
And if there are inconsistencies within the written reps themselves or between reps and other evidence.
The guidance says the auditor has to try and resolve them. If they can't, well, that throws the reliability of all the representations into question again.
Right. And finally, Appendix 2 has an example letter. We won't read it, but what's the value of that?
It's basically a template. It gives auditors a starting point, showing typical wording for the core responsibilities, the information confirmations, and examples for specific financial statement areas. It helps ensure they cover the essentials when drafting their requests.
A practical tool.
Good.
And we mentioned Appendix 1 earlier, listing other ISAs needing written reps. Just to give a sense of how common this is, maybe name a couple more.
Sure. ISA 240 on fraud requires reps about management's responsibility for fraud prevention and detection.
Okay, fraud makes sense.
ISA 250, revised on laws and regulations, needs reps about compliance. ISA 450 on evaluating misstatements asks management to state in writing if they think uncorrected errors are insignificant.
Right.
Then you have standards on specific items like inventory, ISA 501, estimates, ISA 540, related parties, ISA 550, subsequent events, ISA 560, going concern, ISA 570.
Wow, it really is everywhere.
Pretty much. Even standards on comparative information, ISA 710, and other info published alongside the financials, ISA 720, have written rep requirements. It truly highlights how fundamental they are.
It definitely underscores how integral these written representations are across the whole audit. Not a side task, but really a core part of gathering evidence and forming that final opinion.
Exactly. They provide that crucial, direct confirmation from management to the auditor on key points.
So bringing it all together, it's clear these written representations are, well, a vital piece of the audit puzzle. They give auditors necessary confirmation from management about their core duties and the information they've provided.
And it's just so important to circle back to that point. Necessary, yes, but not sufficient on their own. Auditors still need all that other evidence they gather through testing and analysis to really back up their opinion.
Absolutely. It's a complex system, many parts working together, and these written statements are a key gear in that machine for ensuring reliable financial reporting.
Which, brings up a final thought for everyone listening. We've talked about how crucial, clear, honest communication is between management and auditors. Think about that for a moment. What might the wider ripples be for markets, for investors, if that communication breaks down? Or if the information being shared, like these representations, just couldn't be trusted? Definitely something to mull over.